Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through, as always, the most interesting financial market themes that I'm observing. 3 insights in 5 minutes. Let's go. U.S. personal savings rate declines again. Let's talk about that. Spending has still been picking up. The economy's been pretty resilient. Jobs market's still strong. People aren't saving as much. Starting to experience some volatility. Nearly 75%, right? 3/4 of the stocks on the New York Stock Exchange are in long-term downtrends. That's a concern, but investors are feeling that concern. Taking a look at the most recent American Association of Individual Investors surveys, investors are getting very, very scared of the market right now. So the U.S. personal savings rate declines again. For the month of September, there was good news, right? Plus 0.3% month over month personal income, but personal spending actually surged 0.7%, right? People are spending more than they are bringing in. All that put together, the savings rate declined to a current rate rather, of 3.4%. That's the lowest level that we've seen since the end of last year, starting to trend lower and lower. Labor market's been resilient. 2023, the real story from an economic perspective, stronger than expected, but it could be difficult to sustain if we start to see any cracks in that labor market. The fact that consumers are not saving as much, still spending, cause for concern. Technically speaking, right, on the chart here, we have the percentage of New York stocks above their 200-day moving average. You can see it's really, really low, right? In fact, that's all the way down at 25%. What does that mean? That means only 25% are above their 200-day moving average, a common technical indicator, a demarcation for uptrend versus downtrend. Flip that the other way. That means 3 out of every 4 stocks on the New York Stock Exchange are in long-term downtrends right now. We've seen AI-driven large cap tech stocks don't have to go much further than NVIDIA, and a lot of those magnificent 7 driving most of the gains this year. That is nothing new. We're seeing small cap and mid cap stocks performing quite terribly, and that is a real concern from a market breadth perspective. Now, that concern, I am not alone in that. Okay, we track sentiment from a contrarian perspective, right? We see the market, the ebbs and flows of the market. Typically, investors get really fearful during market downturns, and it typically results in actually good opportunities. So these are good sentiment indicators to measure. American Association of Individual Investors comes out weekly. They ask investors how bullish, bearish, or neutral rather are you over the S&P 500 over the next 6 months. You can see the results here. Currently, north of 43% of respondents bearish. Compare that to the longer term average of the past several decades. On average, bears at 31%. So just over 13%, or rather just over 12% higher than the long-term average. That's the highest level since back in March during the regional banking issues that we had earlier this year. So investors are very concerned. Obviously, geopolitical issues right now, starting to see some downturn in the market as interest rates are staying very high. Now, not all is negative this week. We've got Halloween coming up, right? A spooky moon looking picture, but that's not a Halloween story. Today's story is about the fact that NASA is coming out and saying they are looking at building houses on the moon with a goal, an achievable goal, potentially 2040. How are they going to do it? 3D printing of components using lunar dust on the moon, right? They're going to try to use the raw materials from the moon to build houses from 3D printers. Absolutely amazing. What a time we're living in. I can't wait to check out the first moon house. Looking forward to that. With that, I want to thank everyone for watching, and I'll see you next time.